Good morning, everybody. Press 1 in the chat if y'all can hear me. Let me double check that I have my OBS and everything working. Looks like we do have audio input, so press 1 in the chat if you can hear me. Good morning, Elias. It's a really nice name. One. Beautiful. So today, we had some economic data come out, but the economic data didn't really amount to anything. So we had non-farm productivity come in at 0.8%. 0.6 is what was expected, and this is up from 0.3% last month. So a lot more productivity going on for this quarter. And that is actually a good thing. That means that supply chains are starting to improve. And obviously we have the demand destruction being created by the Fed, raising interest rates, destroying the money supply. So this is actually kind of leading me to believe that inflation might actually start to slow down a bit, maybe over the next quarter if this trend continues. But given that we are seeing more kind of slow hiring, that could actually bring down productivity possibly. But it is nice seeing that it was up 0.8%, but this didn't really amount to much. If you look at SPY, it is currently trading at 392.84 versus 393.83 at close yesterday. So it is down slightly. And possibly the reason for this is the news that's kind of spilling out right now, where a bunch of talking heads like Jamie Dimon and a couple other big name bank CEOs are coming out saying that we're possibly going to see a recession starting as soon as Q1 or Q2 of next year. So let me pull up the stock market news, or I'll just go to news. Wall Street set to open lower as recession worries mount. So again, it was Jamie Dimon that came out. Obviously, his word kind of carries a lot more weight just because of how big JP Morgan Chase is. But let's see, Jamie Dimon, and we'll try to find news coming from him. It says inflation is eroding the consumer wealth. It may cause a recession next year. So we're seeing very high likelihood of a recession for next year. I think it was something like 60%. And of course, this is coming from Wall Street and their expectations. I did want to try to bring up the graphic. Hopefully I can find it in my Twitter notifications. I know a couple people responded to what I had said. Here we go. So this is the average probability of shrinking GDP 4 quarters ahead. So this went from just about 12% to currently actually 46% is what it looks like, based on my eyeballs. But pretty much any time that we see a decent rise in this, seems like whenever it goes above like 25%, we do have a recession that follows it. Now, the timing of it isn't always perfect, and it probably never will be because it's very hard to predict when a recession is going to happen. But we did have it in 1970 when it went above 25 again. We had it in 1975, a recession in 1975, 1980 and 1982, I think that's what it was. Then when it went above 25 again, we had it in 1990. In 2000, it barely went above 25, but then we did have a recession, looks like a couple years after, in 2001. In 2008, the probability actually happened 25, so that was actually kind of a slower burn, I guess. And then the recession ended in, looks like 2009 or so. And now finally we have this one coming up. Well, I guess we had 2018, very small recession. Wouldn't really put that one on the books, but yeah, the odds obviously are increasing for a recession. And people are saying that just because it's consensus doesn't mean that it's actually going to happen, but like I said, anytime that goes over 25, the likelihood of a recession is pretty damn high. First time joining the lives. Glad I could attend. Glad you're here, Alt. Roddick, hi Roddick. Good morning, everybody. Hopefully y'all are having a good hump day Wednesday. Looks like stock market is starting flat. And based on my analysis this morning, I think I want to open a call credit spread. I do have an iron condor and a call credit spread that I had opened yesterday. I do want to talk about some of the trades that I made yesterday because I did end up taking some pretty fat losses, unfortunately, because I didn't stick with my exit plan, which caused me to lose $3,000 instead of losing $1,500. So this is something that I wrote about on Twitter. Your trading win rate doesn't matter if you take substantially larger losses. Yesterday I lost $3,000 on a trade because I didn't stick with my exit plan. And if I had exited according to plan, I would have only lost $1,500. So now my plans is to spend the next few weeks trying to stay a little bit more disciplined in my trading, getting out when I say I'm going to get out, and hopefully taking larger wins. That way I don't have to. That way it'll kind of balance out the larger loss that I took. Obviously, you don't want to like revenge trade or anything like that. That will get you in a lot of trouble, especially if you're over trading. But something that I'm working on today and throughout the month is going to be more discipline on my trading. So we'll see. Feeling extra poor again today. What kind of trading guru are you if you're taking losses? An honest one. But yeah, let's see. We're trading at 393 right now. I think odds of staying below 396 would be pretty decent. I do have a 393, 392 call credit spread already open. And then I do have an iron condor, assuming that SPY will be between 393 and 405 today. That's actually a very wide range that I had set up on that, which I'm kind of glad that I went super wide. I got paid $18 in credit. Right now this is paying $34. So you get about double the credit that I did yesterday. But again, I'm bearish to neutral on the markets today. Let me read my, I guess, synopsis of what I'm expecting in the stock market. I'll link the Discord so y'all can see my morning updates. Let's go to the main chat, create an invite. Never expiring. Lamborghini shots only. Yeah. I only drink the finest. No, I'm just kidding. I don't drink at all. Well, besides my mom's margaritas, which are pretty damn good. But let's see. So going to the morning market update, kind of what I've been talking about already. Markets are down 0.2%. They're up to break even now. On recession fears starting as soon as Q1. And I do think that is pretty likely that we're going to see a earnings recession because, Q1 2022 and Q2 2022 were some of the most profitable were some of the most profitable quarters for a lot of companies. So you're going to have those year-over-year comparisons that are going to look very bleak, or basically, if I want to put this in more simple terms, they're going to look like shit. So I do think that we're going to have a recession, an earnings recession in Q1 2021 and 2022. But I don't know if that'll transcend into a, GDP recession, technical recession, probably until Q3 or Q4 would that's my estimate. Maybe even as far out as like 2024, but definitely going to get the earnings recession in the first and second quarter of next year. And then we have non-farm productivity. Talked about that. Came in above expectations, which is good for inflation. So that might keep the market up, but I don't think that's going to have a lot of weight to it. Usually non-farm productivity doesn't carry a lot of weight whenever it comes out. Like if you saw that came out at 8:30 in the morning, which did end up sending us up, 392 all the way up to 393 in a minute. But like a dollar move in 5 minutes on a economic report isn't really that much. Like if you saw CPI, if you saw pretty much any other data point, like the moves are usually like $4 or $5 at least. So again, doesn't carry a lot of weight to it, but I do want to open a call credit spread. And I'm assuming we'll stay below 396. I got that price level already set up. I'll call it 397 just to be safe though. So let's set up a trade for that. The iron condors are starting to lose a little bit of value. So maybe we do go up a little bit based on this productivity report, but I don't think it's going to be much. Maybe it keeps us above the 393 level though. So maybe we open more of these iron condors. I have 5 open that I got for 18 cents each. For this trade, I'm not super confident just based on my analysis of the market being down or flat today, which would lead us back to 393. So I'm going to base it on how much money I'm okay with losing. So $80 per spread is my max loss right now. I have 5, so that'd be 400 that I can lose. And I think I'd be okay with losing up to 800. So right now these are going for 75 in risk for each that you open. So I'm going to click open, make sure I don't close these damn spreads because that happens sometimes. Right now the bid is 25. Since we're selling it, we're going to need to open them at the bid. And again, I'm okay with losing another probably around 400. Obviously, we're not going to take our max loss as long as we close this before expiration. But 75 risk per spread, another $400 that I want to put on the table would be around 5 more of these spreads that I'm opening at 25 each. So another $125 that I'm getting in credit. Well, I guess the bid just went down to 24, but yeah, we're going to place that order. Hopefully get filled. There we go. Thank you, market makers, for filling me at the bid price. They should be filling me at the bid price, but let me post this in the trade alerts, and then we're going to open the call credit spread. Options alert, everyone. And this is going to be a day trade, obviously, since this expires today. Day trade. Just opened 5 more. 392, 393 to 405, 406. SPY IC for Iron Condor. Expiring today, 12/7 at 24 each. So let me take a screenshot of the new added position, I should say. Okay. All right. So now I have 10 ICs open at 21 each. So I can make up to $210 as long as SPY stays between 393 and 405 by the end of today. And I do want to take a downside hedge, assuming that SPY probably won't go again above 397 is what I would be comfortable with. So we're going to set that up. That's going to be another day trade that I make, and maybe we look for a swing trade. For next week, I do think that the Fed is probably going to have a lot of volatility around it. So probably going to look to trade that next week. Let me see. What up, Toxic? How you doing today? Let's see, though. So 397 is a price that I'm assuming that it's going to stay below for today. Expiration is today, 12/7. I'm going to sell a 397 call, the price that I am assuming that it's going to stay below. And I'm going to buy the 398 because I don't have 100 shares of SPY because I am poor. But these are going for 21, 22 each, which is pretty good. 0.22. We're going to have to get them for 21, I think, because the bid ask keeps moving around at 22, 21, 23. Maybe we can actually pick it up for 22. Let's see. And for this one, I feel pretty confident in. I would say, so whenever I'm confident in a trade, I like to base the size on how much money I think the trade's worth. This one, I would say it's probably worth between 500 and 600. So, I mean, that's obviously like my perspective and based on how much money I have and how much money I make. So obviously you're going to have to make your own decision on how much it's worth to you. But I say worth 500 to 600. So that would be 500 divided by 20-ish. 25 spreads that I'm opening for hopefully 22 each. So that's $550 in credit that I'm getting. And hopefully that order ends up going through. Nope, of course not. Okay. I mean, I'll do it for 21. It's not ideal. I usually never get the best fills. But sometimes you just got to bite the bullet. There we go. So, new trade alert for us. New options alerts. Premium, or sorry, everyone. This is another day trade. Just opened a new 397, 398 SPY call credit spread expiring today, 12/7 at 21 each. Analysis in the morning market update. Assuming SPY will be flat or down today on recession fears, but non-farm productivity came in good, leaving a little room for upside. And that's also kind of a hedge against the iron condors that we had opened. Assuming SPY will be between 393 and 405. Hopefully we get the best of both worlds and SPY is between 393 and 397. But typically my luck is not that great. So we'll see how this works out. Now, let's see. Let's check on these 393, 394 spreads that I had opened yesterday and consider probably closing. They're going for 60 cents, which is about the price that they should be. Whenever you're doing a credit spread, usually the short strike price that you choose, if the stock is trading at your short strike price, they'll be going for 60. If it's going at the long strike price, the one that you buy, it's going for usually 40 on the expiration date. So these are about this right price since SPY is trading at 394, which is the the call that I bought. So the long strike price, they're at 60, and then the short strike price, they're at 40. Let's see. Let's see how likely this is to work out first. So seems like the markets are headed up so far this morning. Not to say that the trend can't kind of reverse. Let's see if there's any econ news coming out, though. House Kirby says U.S. has always been clear with Ukraine with respect to escalation of conflict. That was at 8:08 in the morning, standard or Central Time, so that was 45 minutes ago. No other news kind of coming out. Labor costs seem to be, let's see, unit labor cost for Q3, 2.4 versus 3.1 estimated. So the labor costs are actually coming down, interesting enough. Even though wages were up, that's an interesting data piece. It's kind of conflicting. Healing up today. That's good to hear, Toxic. Hi, Eric. That's an interesting emoji that you put there. Hand pink waving. Never seen a pink hand before, but what else we got? So yeah, SPY's right below that 394 mark. So far, we're up 300 today. The call credit spreads, the 25 that we opened, are doing pretty well. I do have a GME trade that I had opened for earnings today after hours. I'm going to close out of the call that I have, because that, I say there's basically no chance it's GME goes back up to my break-even price, which for this one is, let's see, 108 plus 27 and a half. So 28.58. Yeah, it's trading at 22.89 right now. Not to say that it can't go to that price, but the likelihood of it going to my break-even price again at 28.58 is extremely low. So I am gonna close this option. I did open a put debit spread, which is profitable right now, but time to get out of this call option for GME. I'm sorry to all the apes and delinquents out there that might be bashing me for selling this call ahead of the greatest earnings report of all time, but yeah, I'm out. So we cut losses on that. Not sure what I paid 108 for it, so that's like a 70 loss, but the put debit spread that I had opened is doing pretty well. So closing options alert. Everyone just cut losses on the 27.5 GME call expiring 12/9 at 30 each. At 30, I guess. I didn't buy multiple, thank God. I'm a chicken. Yeah, I know. I cried a little bit. Oh no, not the GMEs. Not the delinquents crying. Okay, so yeah, cut losses on it. I opened them at 108. Opened at 108 each, so a 78 loss. But luckily, the put debit spreads that I had opened are making up for that, and then some. If we go back to my GME positions, I have the 26 put, 27 put, which are going for, I hate that they separate it because I opened it as a 3-legged spread. But if I wanted to close these right now, let's see what it would cost or how much we're going to get. So our strike prices are the puts, and they're way up here. So the likelihood of this trade working out is pretty high. Just given where it's trading right now and our strike prices. But this is getting $45 in credit. The bid ask is crazy wide thanks to Robinhood. So let's check out the Aries spreads. I'm sure that that's probably going to be kind of wacky too, just because of how far it is out of the money. If you're trading super far out of the money options, typically your liquidity is going to be lower because less people end up trading those if it's super far out of the money, just because it's not as accessible, I guess, as the at the money options. But you can buy more of those options, so that kind of helps with the liquidity, I guess, and the implied volatility is actually higher for a super far out of the money option and a super far in the money option. Interesting enough. Watch the video that I made on implied volatility yesterday. That'll be very helpful for y'all. Basically, I dumbed down implied volatility as best as I can, and it's basically just supply and demand for an option, which obviously dictates the price of the option. So let me log into the Aries account. Gotta love two-factor authentication. Slowing me down, but keeping me safe. Let's see. Okay, I probably should have said remember this device for 30 days, but it is what it is. game stunk. This week's expiration date, and we had puts and the $27 and $28 strike prices. Let's see, 26 and 27 actually. So a little bit closer than I had thought, but buy the 26, sell the 27. And these are going for 70 cents at the bid and 80 cents at the ask. Okay. That's actually, I feel like that's pretty expensive. So we could sell these for 70 cents each. So basically what it's telling us is that there's a 70% chance that this trade goes in our way to where GME is going to be below 26. The mid price is 80. I think I want to close just so I don't have to hold into the expiration. Avoid the max loss if that happens. Very small chance that it does happen. But yeah, let's try to close them for 70. I opened 6. Not sure what the price I opened them at is. Let me see. Let me check this. So yes, I do trade options in individual stocks sometimes. I'm not just a spy gambler. I do like to trade around earnings reports mostly. I'm a very big events-based trader. Obviously, like, you can't guess every event correctly, but do have a decent track record with that. The 3 option order though, I ended up buying, let's see, 124 and 181. 181 minus 124. I ended up opening these at 57 each. I feel like I overpaid. I got screwed. I feel like I got screwed on that. Well, that sucks. So that means 70 they're going for right now, minus 57. We open 6. 13 times 6, we make a whopping $78 of profit. When we lost $78, we would actually be break even for this trade. That's kind of silly. I think I just hold it into expiration, or hold it into the earnings report, at least today. Take my chances of making more money, because that's just not, that ain't it. So SPY's back below 393 at 392.81, down 0.3% today. So now that we're done talking about GME, let's try to make some money on SPY. So the call credit spreads we opened are already up by 225. They're going for 12 cents each. Let's see. Nah, smart move. Today I scalped both directions beautifully. 101, I'm out. Yeah, I guess I should have closed that Iron Condor, but we'll see how that shakes out. Right now it's down 260. We can lose up to around 800. Let's determine some prices that we want to get out. Looks like it caught a bid on the 392.62 price level. I'm not sure where that's coming from, but we'll pull that up. So that was the low yesterday, right before the final low, and then a rebound to end the day. Let's see though. I think there's a decent chance we stay below this candle of significance that I'm currently holding my cursor over, and that is, whoops. I wouldn't put a lot of money on it. I don't have a lot of confidence because, again, my analysis is either down or flat today. So taking on any bullish trades would be pretty risky in my perspective. But 392.10 was the open of that candle. Close was at 391.36. Divide that by 2 and you get an average of 391.73. So just about where I have it. And that's almost the low that we had yesterday. So I do think that recession fears are kind of amplifying over the last couple of days, which could send us below that price. Now, how far it goes below that price is the real question that we need to ask ourselves. So, let's see, SPY. Yesterday, we had a very rough day. We were down 1.8% at one point during the market. We ended up closing at down 1.4%, if I remember correctly. And we were outside of the VIX risk range. So basically what you'll do is you'll take VIX, what the price level is right now at 23. This is what's known as the rule of 16. So you divide current price 23 over 16. And you should only get about a 1.43% move down every 1 out of 3 days. So since we had a down day yesterday, the odds of today being a down, 1.4% is very low. So let's see, what did we close at yesterday? And we can base it on that. So we'll call it 1.5%. Just to be safe, so 0.985 times the close of yesterday. Let's see, was at, 393.86 times 393.86. Whoops. So we should stay above about $388 just based on the VIX and the rule of 16. Now, we're already trading at 393, so we're probably not going to get a lot of credit for it. But we can check. So today's expiration, we're going to sell the 398 put that we, 388 put that we assume that it's going to stay above. And buy, I meant to sell that and then sell the other one, or buy the other one. And that's only going for $7 credit. That's not good for risk reward. Unless we do come down a little bit further. So I would probably wait on this trade. If we do continue to come down, then I would probably open this. But for right now, like, the risk reward ratio just isn't worth it. Usually I like to open something like this for like $15 to $20 of credit each. So maybe if it gains, double its value, we could make a trade out of that. We could also take the inverse of that trade and assume that it's going to go from 7% likelihood right now to 15% likelihood by the end of the day. Now that I wouldn't spend a lot of money on. Obviously, like, you want to put down minimal risk for something that is unlikely, but that's not out of the cards entirely. So this is going for, if we do a put debit spread, assuming that SPY is going to hit 388 today, which is the bottom of that risk range, we're paying $14 of credit. Now the odds of this happening is probably around, I would say, like 15%. So I think that it's actually valued correctly for right now. But if we do start to come down more, say we come down to like 390 within the next 30 minutes or like a couple hours, this will probably be going for like 25. So you would get 30%, maybe as much as like 70% leverage on this. But again, you don't want to spend a lot of money on this just because the likelihood of it is very low. But they are going for 14 each. And this trade, again, very unlikely, so I wouldn't spend a lot of money on it. Maybe $200 to $300 would be like my max that I'd be okay with losing for this trade. Looks like SPY is already starting to come down to 392, so these just jumped from 14 cents a piece to 19 cents now at the ask. So we don't have as much upside potential now. God dang it, that sucks. That already started to get jacked up. The most that I probably would be willing to pay for it would be like 18. And that's like the limit that I want. Like, that's the most that I'd be okay with paying for these spreads. Again, I think there's probably up to a 25% possibility that this happens. So I'd be closing them at 25. And if I'm buying them at 18, that means that I have, let's see, 7 over 18 I get around 40% leverage, which it's pretty good. It's not the best for this kind of trade, but let's see. I'd be willing to probably put down 10, maybe 15 of these at 18 cents. So I'm okay with losing $270. I'm going to place a limit order for 18. Oh, there we go. And I think we got filled. Beautiful. So we'll post that trade. New options alert. Premium, or sorry, everyone. Another day trade. Just opened a new 399. Sorry, 388. 389. SPY put debit spread expiring today, 12/7 at 18 each. Assuming markets will fall more on recession fears spreading from major talking heads like Jamie Dimon talking about earnings recession for Q1/Q2 2023. So, only spent $300 on that. So that's, very marginal part of my portfolio. I have $10,000 that's available for options. So that's like 3% of the portfolio that I'm okay with losing on that particular trade. Already down $70. So obviously not doing the best. I've never been the best timer for the markets. But I'll say if we go back above, let's see. I think 393.6 is a good level to get out of that trade. But we might be able to draw up a candle of significance here. 393.95 was the open. Closed at 392.87, 392.87. Divide that by 2 and you get 393.41, which is about where we're about to hit right now. So let's see if we go above that, and if we do, I think I'm going to close. So I'll set up a price alert with that, create an alert with that drawing. Hopefully we don't hit it too quickly. It would be nice if we got rejected, but let's see. So it has to not only hit the price level, it has to go above the price level. So you have to have a confirmation. So it can obviously hit it like within the next couple of minutes, but if it doesn't sustain it, like it just hit it right now. But now it has to go significantly above, which just did at 393.6. So I am back out of that trade. I opened how many of them? 10. Let me make sure that the price level isn't changing too much. 55. Wait a minute, that's the wrong one. The put debit spread that I had open. So now they're going for 10 cents each. Let me just zoom into this, make sure that we're at the right price levels. Yeah, and I think that's my exit. I'm done with that trade. Bid or the ask is at 10, so we're closing it. So I guess we need to close it at the bid price since we're selling it to close. And we'll close it at 7 each. All of them. 15 at 7. That way we don't end up taking our max loss. So we got $105 of credit after we paid in like 200 something, 300 I think. So 200 loss. But let's see. So closing options alert, everyone. Just cut losses on the SPY, 388, 389. But debit spread expiring 12/7 at 7 each. Whoops. That's supposed to be an at, not a 2. Oh, come on now. No, I don't want to add anybody. I just want to have the price level. There we go. But yeah, so maybe now that Iron Condor is doing pretty well. Dollar and Treasury are down, so be careful. Let's see. Haven't been checking on the 10-year and the dollar recently, but yeah. 10-year is at 3.468. I think whenever there's a recession, the 10-year does end up going down. The 2-year typically goes up because there's more risk in the next 2 years whenever there's a recession versus the next 10 years. Things kind of even out. So that's where you get into the yield curve, and right now the yield curve is inverted as hell. I think you can go to the Analyze tab on Thinkorswim, go to Economic Data. Let's see. Not exactly sure if I remember how to get to it. Under Money, Banks, and Finance, go to Interest Rates. And there's somewhere it has spreads. Let's see. Interest rate spreads. And then you have the 2-year, 10-year, which is currently inverted at negative 0.5, which is the lowest that we've seen since 2007. Actually, before that. So it's as low. Let me zoom in, I guess. It's at negative 0.8, which is the lowest that we've seen it since, looks like, before this recession. Before the 08 recession, it was actually before the 2000 dot-com bubble. That's kind of nutty. So yeah, they're expecting a pretty deep recession the further inverted this gets. Again, based on the amount of risk that there is in the next 2 years versus the next 10 years. So people are assigning more risk to the next 2 years. The rates for the 2-year are higher because people want to get paid more for the risk that they're taking on, basically. But yeah, SPY's back up to 394. And let's go back to the charts. SPY. Whoops. If I had to guess, I think we're range bound today. I think you have good news coming from the productivity report, but bad news coming from the recession fears. So I think today is an Iron Condor kind of day. So maybe we turn our 397, 397, 398 call credit spread into a Iron Condor. Assuming probably we stay above 390 or 391. Obviously, you don't want to open the put credit spread now while the markets are going up. You kind of want to wait for a pullback. That way you get a little bit more credit for it. So let's see what we can manage. Honestly, I guess flipping on this 389, 388 put debit spread that I opened, I think there's a decent chance that we stay above 389. But these are only paying $8 credit each, so you're not getting a lot of risk-reward ratio. But let's see if we go up one strike price, assuming that SPY is going to stay above 390. I do think that there's a decent chance that we do hit 390 today. But we would sell the 390 put, assuming that it's going to stay above 390. We would buy the 389 put, since we don't have 100 shares. $13 a credit. It's an okay trade. That would be a new low, so the likelihood of creating a new low, I would say, is pretty decent today. I would think that the likelihood of a new low today would probably be around 40%. Right now, these are only going for 20 each, so they're discounting that, my thoughts at least, by about 50%. But we're having some pretty wild swings in the market right now. I'm not sure if there's any news, but that is a very big red candle after following a very big green candle. So very choppy day. Very, very choppy. The call credit spreads that we have are going for 12 each. I'd say there's very slim chance that that's going to recover. So maybe we increase our trade there. So I originally wanted to get paid 25 times 21, $500 of credit. I would probably say I'd be willing to risk like 600-700. So it's not going to be that many more spreads that I open, and you're taking on a lot more risk for 15 cents credit for a $1 spread. So I don't think it's really worth it. I'll keep that position the same. Let's review the other trades that I have. The Iron Condor, that one is, I'm kind of sketched out on. Just given that I think we're probably going to stick around the 392, 393 level, given how the market is reacting so far. There is some news hitting the markets right now at 9:11 a.m., and that's probably what sent the market down just now. Putin says Russia does not have tactical nuclear weapons in other countries, unlike the United States. He says he considers nuclear weapons a response to an attack. Great. Putin says the threat of nuclear war is on the rise. Yes, exactly what we need right now, Putin, is more war. More things for people to worry about. Oh, man. Gotta love politicians. You gotta love them. I think we fell a lot, so we won't fall this much. Yeah, we did fall a lot yesterday. We were down 1.8% at one point. Nice, I'm packing my bags. Yeah, I'm gonna actually just go live in a bunker from now on. This is a crazy, crazy world. Yeah, I need to pack my bags and actually go to Mars. Take me with you, Elon. Oh, we're actually bouncing. What a wild day. I think that's, more war escalations is likely to send us lower. Given that the dollar is down today, like I think Roddick said earlier, dollar and treasury are down. That should mean that gold is going to go up on the nuclear talks, and with the dollar going down, that means the price of gold is going to probably go a lot higher. I do have a leaps option already on gold, but I do think that this is a bullish development. For GLD, it did stay above the 164 price level. So maybe I take a trade, assuming that we're going to stay above that. So 164 seems pretty solid. That's a nice little sort of support level that we have. Currently it's trading at 166. Now I just need the timeline for this trade. That's going to be the hardest part to develop with this. But this will be a put credit spread since it's a bullish / neutral rating, considering that currently gold is trading at 166, and I'm assuming that it's just going to stay above 164, which is already trading above. So let's see what we can get out of that. So if we sell the 164 put, buy the 163 put that expires for this week, we only get $8 of credit. So high likelihood of this trade working out, hence the lower credit that you get. If we extend the expiration date to next week, December 16th, we have the Fed meeting, which is likely going to drive the price of the dollar up, because yields are likely to go up after the SEP, or the Summary of Economic Projections, comes out. So this one I would be less confident in. But I would sell the 164, buy the 163, and that's actually paying $25 in credit. So that's 3 times as much as you're getting for this week's expiration, which is an okay trade. But given that you have the Fed meeting next week, I do think that the dollar is going to go up, which is going to bring oil, commodities, and metals all down. So I wouldn't want to risk a lot. You're risking about $75 each spread that you open. I would probably only be okay with losing like $400 or $500 for this trade. So that would be 500 over 75. 6 spreads that we get to open at 24. Whoops, type that in the wrong spot. For $150 in credit. So it's an okay trade. I mean, given that this has a week and a half until expiration, I could probably put my money to better use. But I do think that it's a decent trade idea. Let's see if we go a little bit higher with the strike price, what we'll get out of that. Maybe we just set our max loss to 164. So we would buy the 164, either sell the 164.5 or sell the 165. That one you only get $32 in credit. So you're only getting an extra like $5-6 per spread that you open. I don't think that risk is worth it though. So I would sell the 164, buy the 163. Right now it's going for 24 at the bid. And I want to open 6 of these, so my max loss is up to 456. Let's do 7. Max loss will be 532, so I'll do 6 at 24. And basically my assumption again is that gold prices are likely to go up with this nuclear talk and with the falling dollar. But the dollar is likely to rise next week because of interest rates going up. So new trade alert. This is a swing trade. New options alerts. Swing trade. Everyone just opened a new. What was our strike prices? 164, 163. 163, 164. GLD is a ticker. Put credits run expiring 12/7 at 24 each. Okay. Let me take the screenshot on Robinhood. That way people know which ones to pick up. Gold likely to go up on more war escalations, with Putin saying risk of nuclear war is increasing, and dollar, it has been headed down with lower rates. But rates are likely to go up next week for the Fed meeting, hence the put credit spread, which is bullish / neutral. But yeah, so we got about 10 minutes till this live session is done. Sounds like you're taking on a lot of low confidence trades. Is there a reason? I mean, I did take on the high confidence trade with the call credit spread, assuming that SPY is going to be under 397. That was I based that one on how much money I wanted to make, which was 600. Given that my win rate usually hovers between 70 and 80%, that means that as long as I want to break even, if I'm taking on a $600 trade, you multiply that by 4, I can take up to, or sorry, you would want to multiply by 3, since 3 of 4 trades are usually profitable. My max loss should be like 1,800. I do think that the max loss for that trade was a little bit higher. Let's see. We opened 25 spreads at 21, so 80 basically times 25. Our max loss would be 2,000, but again, we don't want to, hold this into expiration and take the max loss. But let's see. Currently, SPY is trading at 394. So again, kind of a flat day that we're having right now. And maybe we open the put credit spread side of this, what I want to be an iron condor, another one for today. And I think there's a decent chance we stay above 390 again. So going back to my original put credit spread that I wanted for SPY, I think they were only paying $20 earlier. They're probably paying about the same right now. But I did think that there's around like a 40% chance that we do go to new lows today, which would put us close to 390. So hopefully we get paid a little bit more for that assumption. We would sell the 390 put, buy the 389. It's only paying $12 a credit now, so not nearly enough for the risk I feel like I'm taking on. We could go higher with the strike price. Obviously, you do have a higher likelihood of that trade going against you, the higher your strike price for a put credit spread. Looks like Putin's having a whole press conference right now. Putin says we have not even deployed tactical nuclear weapons in any other countries yet. We didn't speak about the usage of nuclear weapons. Says Russia has not gone mad. Says we have the most advanced weapons, but we do not wave it around. Considers such weapons a deterrent. Putin says does not have tactical nuclear weapons in other countries like the U.S. So it seems like he's having a press conference on the possibility of nuclear. But yeah, I don't know how the market's really going to interpret this. I do kind of see it as sort of an escalation just because it is kind of hitting the news. So again, that does lead me to believe that there might be more downside with two bad news coming out today with the increasing odds of recession plus this nuclear escalation. And then to the positive side, we had productivity coming out. So two bad things, one good thing, more likely to come down. So I'm going to say we'll stay above 391, I guess. So that would still be just above the low. We will get a more handsome credit for that at $20 a piece. We already headed down as soon as I started talking about that spread. I guess the market makers are watching. No, I'm just kidding. Don't have that much influence on the market, but let's see. Let me set up some price levels that I want to get out. So for the call credit spread that I had already opened, I'll probably close if we go, let's see what price levels we can draw up. We'll go to yesterday's price level since we probably had a lot of candles of significance from yesterday, just given how freaking rough our sell-off was. So this was a candle of significance, came in at 395.05 at the open. 395.05, closed at 394.05, so that's a $1 difference, so that's easy. 394.45 would be a price level there. That's probably going to be our exit for the call credit spread, and we should still be profitable because our strike prices are way up at 397. But I think we get out if it goes above that price level. That I think that would be a confirmation that we're going to be bullish for today. And I would say a confirmation that we're going to be bearish today would probably be below this price level right here, which was the low before our last low yesterday. So let's see. Yeah, I want to close out of a put credit spread if I decide to open it if we go below 392.62. Crosses below that price level. Or if we go above 394.45, then I'm out of the call credit spreads. But I'm assuming we'll stay above 391. We get paid $20 a credit for it, so it's a pretty decent trade. Maybe we want to wait a little bit till we hit like 393.40 or 393-ish. That way we get a little bit better credit. Right now they're going for 20. Let's try to time this a little bit better. I think we try to open at 393.41. I think that will be a decent target. Right now the bid is 18, so you're not getting a great payout. Oh, there we go. We just crossed below, so now we're going to get more credit. 21. I would want like 22 each, but that's it. The market makers are okay with giving us that much. This trade I'm not as confident in, so I'm going to base it on how much money I'm okay with losing. It's about $80 that I'm risking per spread, and I would probably be okay with losing like 300, so this is a low confidence trade. So 300 over 80, risk per spread. We can open 5. 5 times 80 would actually be 400 in risk, which I think I am okay with. So, all right. So we bounced a little bit from the midpoint, it seems like, between 392.93 and 393.41. Right now the bid is at 19, so maybe we get a little bit more credit for opening it. There's a limit order. We only get $95 in credit for it, which blows, but better than getting paid nothing, I guess. Damn it. These bid-ask spreads are just moving too quick. I'll try to get them at 20. I'm going to leave the limit order in at 20, and if they don't fill it there, then I just won't enter the trade. Yep. Looks like we didn't get filled. That sucks. Alright. What is the expiration on the gold trade? That's next week, the 16th. Do you ever just buy and sell naked options like they are stocks? Most beginners start with them. Yeah, I do sometimes. Like for the GME, I ended up buying a long call option. Sometimes I trade long options. It's mostly spread options that I trade. Probably like 3 out of 4 trades, or like 80% of my trades, are spread options, just because you have a defined risk, you have a defined reward, which is really what I like about them. But with whenever you buy a call or whenever you buy a put, you have unlimited potential reward, so it's a lot harder to kind of gauge my risk going into the trade, because I either like to base my risk on how much money I want to make, or I base my risk on how much money I'm okay with losing. So with the first part, it's a little bit harder to judge. But let's see. Yeah, it looks like we bounced right off of that 393.41 price level. Headed higher today. Maybe we recover some of the losses that we took yesterday. Seems like the likely path at the moment. I'm kind of surprised that the markets are heading up, given recession fears and the war talks. But I don't know. It kind of seems like we're just going to trade in that range that we started this morning. We're topping out at 394.80. Let's see. I'm at break even for the call credit spreads that I had. Let's see. They're going for 22 each. I ended up opening them for 21. So we'll see if we hold above the 394.45 level or not. I think chances are we come below it. But let's see first. I'll give it like 5-10 minutes. Or if it goes probably above the new daily high, I'll probably get out. I think that's probably the best thing to do for right now. So I opened 25 of them for $24 in credit each. Or sorry, I opened 25 of them at 21. It looks like I'll have to close them for like 26, so I'll take 125 loss. But let's see if we hit the new high first or not. If we don't hit the new high, that would be good for that. But let's see. The good part about this trade is that we have a lot of room for upside since we chose the 397 strike price. So I'm glad that I chose a very likely trade. But, if we do crack that new high, I do think that we're headed higher. Yesterday, we probably just had an overreaction sell-off. Especially considering that we were down like 1.8% when SPY should have only fell 1.4. Looks like the Qs is still down today, though. So QQQ, the NASDAQ 100 is down 0.4%. Okay, kind of looks like we topped out again. So maybe we have this trade in the bag. 394.45 is the price level I'm looking for. We could hedge with a higher put strike price, kind of like the one that I had earlier. I don't want to go 392, but maybe I'm just wrong. Maybe I'm just wrong on direction today. The 391, 392 is paying 12, so if we had opened that earlier at 20, we'd be up like 50%, but shame on us for not getting in when we should have. All right, back below that 394.45 price level for right now. If we hold that, that should be pretty good for the market. I don't know. Kind of want to take a low confidence trade, assuming we'll be above 393. So we could just add to the put side of that iron condor that we had. Those are paying 25 each, so we're already risking about 750. I mean, I just don't have a lot of confidence for that. So I think 750 is my limit there. I do think that there's a decent chance that we just end up at like 393 or 394 today. So that you could maybe do a iron butterfly. That might actually be the best trade to make today. Now you either say it'll be 393 or 394. So I would say we'll probably be at 390. I don't know. Either you want the top of the range that we have today or the bottom of the range. I would say bottom of the range today, based on my own biases that I have. So you would sell a 393 put. What price do we think it'll be above? I would say probably 389 would be quote-unquote safe. So that's $4 difference between 393 and 389. So now we sell the 393 call and then buy 4 strike prices higher, which would put us at 397, and you'll get $244 of credit for $400 of collateral. So that means you're risking 400 minus 250, basically $150 to make $250. So risk reward on this is good. But the problem is with an iron butterfly, you want the stock to be as close to the strike price that you sell, the 393 price level that I'm choosing, and as close to the expiration, so at like 3:59 p.m. as possible. That's when you make like the most amount of profit. But I do think that it's a decent trade idea. We're risking, 150 for each spread. I honestly, with an iron butterfly, I usually only risk like $200, $300 just because of the likelihood of it being so damn low. So I think I would only just open one of these spreads. Right now, the bid is 2025. Since we're selling this in order to open it, we're getting a credit to open it. You just have to go with the bid price. Let me take a screenshot of this. So let's see. Submit my order. 225. So we got 234 for the trade, which is not bad. All right. New options alert. Everyone. This is a day trade again. Day trade. Just opened a new. So our strike prices were 389, 393, 393, 397. Spy IB for Iron Butterfly at 225. Or actually, I actually got filled at 230 something. 234 each. $234. So basically, the closer to 393 price level and the closer to expiration 3:59 p.m., the more of that $234 that we get to keep. So that's the trades for today. Let me write the analysis. SPY looks to be trading flat with good news from econ data, but bad news on war escalations and recession fears, more likely to be at the bottom of this morning's range than the top. So I'm assuming SPY will be 393 to end the day. And that's all the trades that I'll make today. Hopefully I will catch y'all tomorrow, same time, 9:30 in the morning. And until then, happy trading, everybody. Bye.